All right, guys, today I am
All right.
here with Michael Berlin. He is investing with Billy, and that's what the headline says here. You've been investing with Billy for quite some time. Mike, let me just give a little background on you, and then I want to get into some questions. So I met Mike through my brother. You and my brother worked together at the town for years, and you were interested in diversifying some of your portfolio and put it into secured mortgage notes. And I know that when you and I first met, you were one of the toughest individuals that I had to speak with up front, because you are very apprehensive. You work hard for your money, and you wanted to make sure that you were going to be making the right decisions when it came down to your investments going into the proper structure. So first, Mike, let's just introduce yourself, say who you are, what you do for a living, and then I'm going to start going into some questions.
My name is Michael Berlin. Actually, Billy, currently I'm retired. I retired about 2 months ago. But
Congratulations. That's right.
Thank you. But as you did state, I did work with your brother for a municipality for the last 25 years. And yes, I was looking to diversify my portfolio a little bit.
Yeah. And so, Mike, I look at you, and a lot of guys would probably look at you and say, the average Joe. Like, you work for your municipality, you did your 25 years retired, but behind the curtain, like, you are an extremely well invested and extremely diversified investor. I don't want you to go in so much into exactly what you have. That's your personal business, but you have a broad array of money invested between stocks and bonds and mutual funds. And what other investment vehicles are you invested in?
Basically, I never did anything with real estate before until I met you. But basically, it was just your securities, like you said, your stocks, your bonds, a couple of alternatives.
Got it. And so let's tell people, we're recording these videos for a reason. Like, a lot of people who want to start investing with me and with Max Returns, the biggest hurdle they have to come over first is not the investment itself. It's actually myself, them to actually get to know, like, and trust me. And so you had a little bit of an advantage because you did know my brother. So the trust factor was, even though it wasn't there 100%, you did have somebody who introduced you to me. So because of that piece of trust factor, it was like a step up for you, but you still grilled me. Like, you went through like detailed like analysis of everything. Let's speak to that. Like, you're an analysis type guy. You like to look at everything. So tell me what you did in the beginning when you were looking to invest money into some of our deals.
Well, as you stated, I did come over. I had some conversation with you. Any documents that I was going to do business with you, I had not researched, but I had, what's the word I'm looking for here? Gone over by my attorney. Okay. And I'm one of those people, I could tend to be I don't like a lot of risk. So I like to make sure if I'm going to put my money out there that I'm going to minimize my risk. So I tried to do as much background as I could on you.
And obviously the background worked out because you ended up investing, 6 figures with us, and you've been continuously investing with us now for how many years?
I believe we go back to 2014, Bill.
It's been 6 years already?
Yes.
Holy shit. Dude, in my head, I'm thinking it was like 2.5, 3 years. It's been 6 years?
It is. As a matter of fact, I looked at it this morning before we started our conversation. I was like, I want to see how far we go back. It's been 2014.
Wow. So that's impressive, because I had a bunch of people on within the last couple of days, and I had my first investor, Lenny, who's still with me from 11 years ago. So you were right there in the beginning investor pool, which is great. And I'm, and I want to thank you, Mike, because you took a risk on me, even though, mortgage notes, and when people don't understand an investment piece, they automatically think, well, how am I going to get hurt? And so one of the things that this business, this investment, this alternative investment strategy does that no other investment out there does that I'm aware of is that it gives a secondary level of security, because your money, when it's invested into the piece of real estate, it's not just an IOU with the note. You actually get a mortgage that's recorded against that property. So God forbid anything should happen, that security instrument is almost your guarantee that you're going to get your money back. And I know that was one of the things that you found interesting because you're like, look, what's the risk? How am I going to get hurt? I work, meaning you, I work hard for my money. I'm not just going to take $100,000 or $200,000 or whatever the investment is and just give it over. Like, what is my risk and what's the return? So speak to that, because you are very analytical when it comes out to that piece. And you did a lot of research on it.
Again, as you stated, Bill, when you get into securities, bonds, stocks, and everything like that, that's pretty much like an ownership in a company. So if the company goes belly up, you lose everything. With an investment like yours, you're actually investing in something, in a tangible asset that's always going to have some sort of a value to it.
Yeah, it's important. And, you know, I had Lenny on last week, I think it was, and Lenny he's a mortgage lender for years. He did this as a business, and now he does it privately. So he really understands how to create wealth. And so one of the things we were speaking about was that mortgage, that security instrument that's on the property. Without that, if you just have a note, and a note, let's just go into a note for a second. A note is very similar to that of a bond. It's an IOU, right? A bond,
correct,
a T-bill, it's a form of an IOU. But what gives it the secondary level of security is that mortgage document, that piece of paper that gets recorded. And when people are investing in real estate, whether it's with me or somebody else, the two documents that they have to make sure they get signed is not only the note, but it's also the mortgage. And a lot of people, what they do, guys that I guess raise capital, is they'll raise money from people like yourself, but they'll only give that person a note. They won't secure it with a mortgage. And without having that mortgage, you really do have a lot of exposure, meaning you, the investor. Yeah. So one of the things you also, when you came in and you were considering investing with us, is you wanted to make sure that the money was going to be allocated to a certain deal. Like a lot of people that I'm speaking with, they're like, well, I don't want to just give my money to you. How do I know what my money's being used for? So speak about that, how the money actually goes in for a specific property. It doesn't come to me personally. It doesn't go on my operating account. I don't use it to fund my business. My business operating account is completely separate from the actual money that gets invested into these real estate deals. Speak to that if you can.
Well, that makes a big part of it, Bill, because you hear these days about all these schemes and everything like that, these Ponzi's, so to speak, where people are taking money from one person. What they're doing is they're funding a lifestyle, and what they're doing is just getting money from other people and just giving that other person their return back. This basically what you're doing is you're securing into one property, one tangible asset, and there is no commingling of funds or anything like that.
Yeah, and that's important for people to understand, Mike, because, you know, everybody heard of Bernie Madoff. And I had a couple of people that were interviewing me saying, listen, I have $500,000 that I want to invest in you and your business. And they said, do you have audited financials? And I explained to them that I'm not personally taking your money, and my business isn't taking your money. Your money is actually going to an individual property with a mortgage and a note. I go, audited financials, if somebody gave them to you like Bernie Madoff did, he can doctor up whatever the hell he wants to do. And the reason why those people lost their money is because they were investing into him and his business. He took the money, there was nothing securitizing it. There was no real estate. There was no, it was just, I'm giving you my money in good faith, Bernie, make me money. And he turned around, he took the money and did whatever the hell he did with it. So I just want to stress to people that, you know, if you're going to invest into secured mortgage notes as an alternative investment, the first primary thing you want to look at is not even the real estate behind the scene. You want to look at the individual that you're going to be investing in, because that person up front, in this case, it's going to be me. Does he have the experience? Does he have the credibility? Does he stand for certain values? Is he somebody who's 100% transparent? And whether you invest with me or somebody else, you want to make sure the individual fits that model. Secondary to that, you want to make sure that they're investing your money and it's secured with a mortgage and a note, not just a note. And that's how you, as the investor, are 100% secured. If I was to take your money into one of these deals and I lost money as a real estate investor, what would happen to your cash? You have a mortgage and a note. What happens? You get back your 100% principal plus your interest.
Correct.
Correct?
Correct.
So I've never, in all the deals you've invested in, I've never lost any money personally. But when I had Lenny on, and I've been with Lenny now for, I think, 11 years, and we've done hundreds of deals. I lost
Mm-hmm.
on 2 properties that he invested in. But the key thing is I lost. I lost the money. Lenny got 100% of his principal back plus 100% of the interest that he was owed. And see, that's the thing that I guess investors, when they're looking at these alternative investments, they get concerned about, because they're like, look, if I'm going to put my money into this, how do I know A, that I'm going to get it out? And how do I know B, that I'm going to actually earn the interest this guy's telling me? My primary concern for my investors, like you, Michael, and for the other 40 or 50 that we have inside of our portfolio, the number one primary concern, first and foremost, before I give them a return of their interest return, is preservation of capital. And so if you're going to invest 100,000 or 200,000 or $500,000 in our deals, my number one primary concern is to ensure capital preservation, that you get that money 100% back. And then secondary to that is getting you the nice, healthy 6, 8, 10% return that you guys get on an annualized basis. But my primary is that capital preservation. Now, looking at the stock market, there's no capital preservation. The stock market's volatile. You could have $500,000 in the account today, and 45 days later, if this market adjusts 15%, what happens?
Could be 45 minutes later, Bill.
It could be 45 minutes. Exactly. It's scary, man.
Yeah.
When you're doing, like, you have such a diverse portfolio, Mike. Give the viewers, the listeners, some examples of how this is just different. And I know you touched on it a little bit, but how is it different with investing in mortgages versus the stock market?
Well, first of all, I do a lot of the investing myself, but I also do pay brokers, which means I have brokerage fees. I have other overhead, so to speak, that comes along with these portfolios. With you, this is a one-on-one basis. I don't have all these other expenses or anything. That's number one. Number two, you're very, very accessible. I can get to you whenever I need to get a hold of you. You get back to me. I'm dealing a one-on-one with an individual. So these things, I actually cherish stuff like that.
I appreciate that. You made an important point, which I want to definitely dive into a little bit deeper. One of the keys when I'm speaking with other investors, they say to me, well, listen, Billy, the stock market over the last 30, 50 years has been consistently earning over that time frame 8%. And I'm like, that's a good, accurate, fair statement, fair return. What they don't take into consideration is what you hit on, which is the fees. If you have somebody managing your money, if you have a stockbroker doing the trades, or if you have a manager, a financial advisor, what other guys are out there? Asset managers, wealth managers, what do they call themselves? What else?
I don't know. They have a million different million different letters after their names as well.
Yes, alphabet soup, I call them, right?
Right, exactly. But
what they don't take into
and that
consideration
changes as well.
What they don't take in consideration is when you have somebody managing your money or you're invested into a mutual fund, all these fees add up. And so we've done a study that if you take a $100,000 investment over 20 years, where you're earning an 8% return through somebody who's managing your money, and they're hitting you with 2%, which 2% doesn't seem like a lot, but over 20 years, your portfolio is going to be worth almost $100,000 less than if you invested at 8% consistent. So and you're open to the volatility. So there's no guarantee that when you're ready to take your money out, when you're ready to retire, that you are going to be consistent with that 8% across the board. Some years you might get 12 or 15. Other years you might be negative 15. And so that's what people don't understand. It's the volatility and it's the fees when it comes down to investing in the stock market. Compare that to alternative note investments secured with a mortgage and a note. It's consistent. No matter what happens in the real estate market, no matter how good or bad I do in the real estate deal, the people who invest their money are getting paid back. Principal plus interest, no questions asked. And that has that been your experience with me?
Absolutely, Bill. There's also a couple of other factors, depending on the monies or the funds that are going to you to be invested. For somebody like myself, this is basically pass-through income. Whereas in whatever I'm dealing with the stock market and everything like that, I have capital gains I have to worry about. And there's a lot of other expenses that get involved with this.
Yeah. So, Mike, educate me on the piece with the stock market. If somebody's trading for you and you have a nice healthy return, they buy and then they sell, and you have a 20% gain, you have to pay capital gains on that gain, even if you're not taking that money out. Is that correct?
Well, yes, but there are ways that you can sell off other securities where you had losses, and you can carry losses into different years. I mean, that's up to the CPAs. You know what I'm saying?
Yeah.
But if you have a good broker and they work well with your CPA, and they know what they're doing, you can minimize your tax liabilities. But they're still always there. It's like Uncle Sam's always your partner. You know, when he comes first, as a matter of fact.
It's horrible, man. We work so hard for our money. And Uncle Sam has his hand out, and he's like, you know, one of the things, and I know you're not doing this with me, but I do have a few people who are. One of the key advantages that investing into secured mortgage notes, which is it's a legal loophole with the IRS, is people can take their money if they have it in a 401k or a traditional IRA. They could actually convert that over to a self-directed 401k or IRA. And now they can legally take that money and invest it into secured mortgage notes. And depending on what they have, either traditional or a Roth, they can grow their money tax-free forever and not pay income tax on it ever again. And it's like that's on the Roth side. It's a legal loophole that listen, we're not taught this crap in school. And that's what pisses me off the most, Mike. Like, if you weren't born wealthy, and they don't teach this in school, you think this is the way it has to be. I have to invest my money. There's so many different ways you can invest. You don't have to invest traditionally the way everybody else does. There's ways out there to catapult your wealth if you leverage the laws that are out there. And one of the quickest ways to become wealthy is to eliminate the taxes you have to pay, because when you do that, your wealth grows substantially. And one of the key advantages to doing that is through self-directed IRAs or self-directed.
Correct.
Do you have any of your money in a self-directed piece, or is everything like you have like a pension?
No, I don't.
Right.
I have my pension. I have retirement accounts. I have I believe it's a 453B.
Right.
I do have a Roth at one time. You know, I still have a Roth. But you're right. The self-directed IRAs is definitely a way to go. It suits some people, doesn't suit others. You know, there's good pros and cons with the self-directed as well, but it definitely works. It definitely works.
Yeah. Yeah, in my view, all the research I've done, because I have quite a bit of money in the self-directed side, as long as you're putting your money to work and you don't let it sit there, it's pro all the way across the board. The fees are minimal. You can get above average returns, especially if you're doing secured mortgage notes with us or with somebody else. All right, Mike, what else? People are out there. People want to invest with Billy Alvaro. They want to come into max returns. If somebody was to call you and say, Mike, honestly, I saw you on the video. Give me the real deal about this guy, Billy. Like, what's it really about? What's it really like working with him? Was it really that good? What would you say to him?
Well, first of all, I would say, once again, I'm a very skeptical person. So when it comes to my money, I tend to like try and dot my I's, cross my T's. So even though I was introduced to Billy through somebody who I'm fairly close with, as a friend and a coworker, I did do my homework on Billy, and I trust Billy. I really do. Over the time, we've built up more of a relationship. We're actually friends, not just, you know, business compadres, so to speak. But I trust Billy. I know Billy's family as well.
You do. You know my whole family.
Well, pretty much.
Mike, listen, I appreciate you having faith in me over the last 6 years of
I
our
do,
relationship
Bill.
investing. Do. I appreciate you, and I appreciate you taking time out today. I know you're retired, so you have some time on your hands. I know we're getting through this pandemic, so I'm sure you're grateful just to see somebody and actually have a conversation, because the pandemic's been crazy. But listen, man, I appreciate your time today, man. If there's anything I could do with you in the future, let me know. But I'm looking forward to continued success with the investments that you're entrusting with us. Thank you.